Today we will chat about one of the hottest topics in Australia, extra superannuation tax that Labor is introducing from 1st July 2025. Even if this change does not affect you, please stay here with me as I think this is one of the most important topics you really need to understand and make your own decision which way you are willing to proceed in the future. Only 3 months ago, I did a video, Extra Superannuation Tax for the Wealthy, in which I introduced the planned change by Labor to remove the concessional tax rate for superannuation funds over 5 million in total value. In overwhelming numbers, you voted that this is a good change and the wealthy should pay a higher tax. Now, Labor has returned with their set policy that is going to commence in 2025-26 financial year with rules completely changed. The balance is no longer 5 million but 3 million, which obviously will impact more Australians and more super funds will be caught with that change. Maybe that change is not affecting you right now, but please be open-minded to see where we are heading with the superannuation system in the future. With this change, and I'm sure many new to follow, as history is already showing, and it is not a pretty picture. So today I will explain the new change introduced by Labor that will affect more people than you might think, and the way it is explained to you by the government. My name is Catherine Isbrand from About Retirement. I'm a certified financial planner and you are watching About Retirement TV, the place that I created to assist Australians to be better prepared for retirement and for those who have already retired to improve your retirement income, value of your assets, and government benefits. Today we are talking about superannuation and Labor's new plan to introduce a new additional superannuation tax. Unlike your income tax, that is calculated on a sliding scale as per table showing, your superannuation pays a flat tax rate of up to 15%. I say up to because if you invest portion of your superannuation savings into Australian shares, franking credits paid on those shares dividends will reduce the tax bill that your superannuation pays on earnings. This strategy is available to every single person. Tax management is open to every single Australian. I don't really understand that argument that rich people get advice therefore they know how to avoid tax. Well, first of all, no accountant or financial planner will ever recommend tricks for tax avoidance. It is illegal. However, strategies for legal ways of tax minimizations are available to every single person. It is just that wealthy people don't mind paying for good advice, and that's exactly the reason why they are wealthy. So if you have a choice to pay only 15% tax on earnings rather than your marginal tax rate, it is pretty obvious what is a good and profitable choice. This is how superannuation became so very popular, and almost every working Australian contributes extra to super, not because it is such a great investment vehicle, but due to its concessional tax rate. But now the government is going after all super funds with values over $3 million. The plan is to make all those super funds pay additional 15% tax on earnings on balance above $3 million. This new plan is to be introduced in 2025-26 financial year. Okay, before you make your decision whether this is a good or a bad measure, let's look at this rationally and analyze it together, and then you can make your own judgment. How many people do you think will be affected? Well, 33,500 people with superannuation balances between 3 to 4 million, 16,500 with super balances between 4 and 5 million, 23,000 with super balances between 5 and 10 million dollars, and 6,000 people with super balances above 10 million dollars. With the last group, there are 17 people with over $100 million in super and one with over 400 million. That is a lot of money in anyone's language. But before you get angry, let's put emotions aside and let's just look at legislation. Superannuation and super contributions need to meet the sole purpose test to be eligible for concessional tax of 15%. The sole purpose test means that your fund is for the purpose of providing retirement benefit to members or to their dependents if a member dies before retirement. This is the rule for big public offer funds as well as small self-managed super funds, SMSFs. So it could be argued that nobody really needs $100 million in superannuation to provide for their retirement. It is not the purpose of superannuation fund to provide a tax-effective vehicle to pass wealth to the next generation. But if the government expects people to follow this rule, comply and respect the sole purpose test, then the same rule should apply to the government. If the superannuation savings are solely for the purpose of building your retirement nest egg, by law it is not for the purpose of the government helping itself to your money anytime it has a hole in the budget and with your money to try to solve the national housing problem or infrastructure problem. If it is coming to the point of you having no say how supposedly your money is invested, but is being misused by the government for their own political agenda, that is not right, and it is against the principal rule of superannuation legislation, sole purpose test that I've just explained. But believe me, it gets worse. If you are as crazy as I am and you follow government papers, you can read the latest consultation paper dated 20 February 2023, legislating the objective of superannuation. If you wish to read the full statement, visit my website aboutretirement.com.au and you will find the link to the full consultation paper. In order for the Labor Party to do with your superannuation money whatever they want, they actually are changing the proposed objective of the superannuation fund, therefore fundamentally changing the sole purpose test. On page 9 it reads, "The objective of superannuation is to preserve savings to deliver income for a dignified retirement alongside government support in an equitable and sustainable way." You can put beautiful words into anything you want to express in a way that it sounds as a good and caring measure, but let's see what that really means. And now I'm quoting. Number 1, preserve savings. It says restricts access to superannuation savings for a person's retirement only. Have you noticed how with time your access to superannuation is further and further away into your late 60s? I'm sure that with another change, your preservation age will be delayed, your access to your superannuation will be delayed, while in the meantime the government will help itself to your money. I know our life expectancy is getting longer and longer and more people work longer as well, but there are still those that actually want to retire at the age of 55 or 65. So why you cannot access your own money at any time you wish to retire if you have enough in your superannuation to support you for later years. Also, the statement says for persons' retirement only. Have they forgotten about the death benefit? What happens to my money if I die? Very unclear and frankly a worrying statement. Number 2, quote, deliver income emphasizes the principle of superannuation to provide income in retirement. Sounds good, you say? Well, what about if you need to withdraw a lump sum, part or all of it? Will you be able to do this? Will you have access to your superannuation savings outside of the income stream? All super funds will love that idea. Huge and very secure business for them. But what about you having access to your own money? Number 3, quote, dignified denotes the importance of financial security and well-being in retirement. Those are some big words that the government is using here. So let's combine this with the next statement. Number 4, government support intends to encapsulate and highlight the superannuation system interaction with the age pension pillar as well as other government support. The truth is that our existing smart superannuation system will assist the government to reduce cost of age pension to the public with time. More and more people approaching retirement have had their superannuation fund running for longer than the previous generation. Your employer contributions together with your salary sacrifice that we do to save ongoing tax, plus additional personal contributions over time build superannuation balances that are slowly putting people outside of age pension eligibility. Therefore, the government doesn't really need to do much. Just wait patiently for a few more years and our own super savings will cancel out our eligibility under the asset test. And that's okay, we want to be a wealthy nation. But if the government is able to save money on age pension front, maybe other benefits should be increased, especially for people in real need. Number 5, equitable and sustainable, signifies that the system should provide similar outcomes for people in similar circumstances, and government support should be targeted to those in need. Superannuation also needs to fit within the broader fiscal strategy. Again, lots of big words. If the government really wants to support those in need, it is enough to increase the tax-free threshold. This would help those in real need or on low income. Another option is to increase the rental assistance payments. Those are at ridiculously low levels, not updated in years. Also, why not put more resources into Centrelink to actually really help Australians to have their applications processed in a matter of weeks and not months? Why not improve our medical system where people are on waiting lists for months living in pain? There are a lot of ways to improve lives of people who really need assistance, but not by controlling all retirement savings for government's own benefit. And the last sentence really worries me. Superannuation also needs to fit within the broader fiscal strategy. This is a beautiful getaway to open superannuation to tax meddling as much and as often as the government pleases, making superannuation a very unstable and unreliable system. As you can see, there is lots behind the scenes, not just increase of tax for super balances over $3 million. In general terms, you might think that extra tax is fair and people who have that much in super should pay extra tax. But this number is not subject to indexation, and this is the main issue that should really be taken into consideration. Introduction of this policy may not impact you directly, and the government advertises that this change will only affect approximately 80,000 people. That's not a big number, but will bring additional tax revenue of $2 billion. So why should you care? Well, as I said, the worrying fact is that 3 million limit is not indexed. Therefore, it stays put and will not increase with inflation. This will impact terribly on your children and your grandchildren's financial well-being. The limit of 3 million with inflation running at average at 4.5% will equal to $1.9 million in 10 years, $1.5 million in 15 years, and $801,000 in 30 years. Can you see how with each passing year that new tax will apply to more and more people? Especially considering that your kids and your grandkids, when they start work, they have superannuation from day one. Most likely you haven't. Therefore, if this measure goes through, with time, everyone will be affected. Therefore, superannuation will no longer be a good retirement saving vehicle, as it is no longer to be tax effective. But in addition, there is this great worry of government control over your money to the degree that you may not really like it. So superannuation and pension system continues to be great for baby boomers and for your retirement. But I think people who are younger should start reconsidering extra superannuation contributions and find other investment vehicles that are within your control and your choice. I hope that after my long explanation you can see how this new superannuation tax on wealthy that is supposedly impacting only 80,000 people will impact so many more in the future. On 30th March 2022, there has been $3.5 trillion invested in our superannuation system. It is just too much of a good thing for the government to ignore and not to play with it, to get their portion of the money, to cover holes in their budget and to use funds for their own government project. And this is a really worrying trend. I know that this might be quite a controversial video, but I hope you got lots out of my explanation. So please think carefully before you start supporting such changes, as they might not impact you immediately, but most certainly will impact lives of your children and your grandchildren. If you agree with me, please give this video a like and subscribe to my channel. If you would like to learn more about superannuation, retirement, income streams, age pension, and any other retirement planning topic, please head over to my website aboutretirement.com.au, where you can find lots of very useful information. And while you are there, sign up to my newsletter to be kept up to date with all the changes that can impact your retirement. On each page there is also a button, book a meeting. If you are in a situation of needing good, honest financial planning advice, organize the consultation using this button. I've noticed that some people are emailing me directly. Well, if you don't receive a reply from me, this is not because I disregard you or I ignore you, but often emails end up in my junk mail or sometimes can be actually stopped by a spam filter. So if you don't hear from me, please just organize a meeting or call our office to book a meeting at a suitable time for us both. And now please watch that previously mentioned video, Extra Superannuation Tax for the Wealthy, to further understand what is going on in our superannuation space. The second recommended video is living and housing options in retirement. This is the new topic that has been requested by many viewers and I cannot ignore it. Well, enjoy it and I will speak with you in my next video. Bye for now.